I'm Johnny Fernandez, anchor at FinTech TV, and you're watching Taking Stock.
Two minutes to go here into the closing bell on the trading floor of the New York Stock Exchange at this hour. We are looking at all-time highs for the New York Stock Exchange Composite Index, as well as for the Dow. Any gain in the Dow today would be another all-time high coming off of Thursday's record-setting session. As we head into the closing auction here on Wall Street, we are looking at major significant gains, at least the S&P 500 in positive territory, about 0.7%. The Dow up about 0.25%, the NYA up 0.5%, and the small caps. Peter Tuchman, you can join me here as we wrap up here the open to the show. What'd you see into the closing tape here? Another all-time high for the Dow today, my man.
It is, but you know what? It's sort of odd. I think we've been waiting for July volume to come in. Right, normally at the beginning of a quarter and beginning of a month, you're going to see fresh money come in. It's an allocation to mutual funds and whatnot. Today we finally saw it on both sides, to buy and to sell. We spent from 2 o'clock until almost 3:15 inching our way up to record levels, which were just spectacular, as well in this buy as well as the Dow. So we're starting to see that volume pick up. People that spent last week in sort of in the corridor, right? They didn't know really what was going to be the next catalyst or on the upside or the impediment to a higher market. Now, today, we're starting to see money being put to work, higher markets. It's beautiful.
And it's a light week overall, very light on economic data, light on earnings. Securitize here for the bell. Peter, thank you very much. We'll talk to you again soon. Time now for the close. There you have it. What a day down here to kick off the first full trading week for the great month of July. Your final tail of the tape, the S&P 500 up 0.7%. The Dow 30 components in the green for another record-setting close of 0.3. The New York Stock Exchange Composite Index also sitting in at a record high, up 0.5%, while the small caps up 0.5% as well. IBM, Boeing, Goldman Sachs, your strongest names in the Dow. Your Dow laggards include Merck, Amgen, and UNH. The Mag 7 mostly trading higher on this Monday. Tesla shares up about 6%. Microsoft shares fractionally under pressure. Catching a bid on this first trading day of the week here on Wall Street, the big banks, the semiconductors, most of the memory and the quantum names, the high-flying, high-beta stocks, for the most part, doing pretty well today. Bit of downward pressure, though, for the streaming giants, Netflix, Spotify, Paramount, Skydance, as well as Disney. Similar story goes for the home builders, healthcare and biotech, as well as oil and energy stocks. Let's bring in the man himself, the great Eric Criscuolo, market strategist, down here on the trading floor of the big board for his take on today's tape and a lot more. Thanks for being here.
Always a pleasure.
So first of all, this is an interesting week because we always like to go through and look at the calendar, the potential catalysts. We are very light on earnings this week. We are very light on economic data, maybe a little bit of Fed speak. What historically do you look for in a week like this when we don't have those big picture issues to kind of attach a narrative directly onto?
Yeah, it's kind of interesting to just kind of watch what has worked really well going into that week that you're asking about, and then seeing how those stocks react. Is there some profit taking during that week? Is there some type of rotation from the winners to the losers, or is it just continuing the trend that you're seeing? So you just want to see if anything is kind of shifting while there's kind of no, there's not a lot of noise in the market. You want to see if there's still things are still trending, or if things are kind of changing, as there's nothing to kind of keep the market's attention on.
Chips bouncing back today. It's been a shaky couple weeks here for the semiconductors. What do you think that signals in terms of the broader market? We do have a pretty sizable and notable bounce back session the way we had today.
Yeah, I think it shows a couple of things. I think that it shows that there is still a desire to own these names. There's still a belief in the AI narrative overall. And I think that, by and large, it doesn't look like there's anything that's going to, at least in the short term, slow the narrative down anyway. The spending, the capex, the memory shortages, those are all things that are kind of going to be sticking for a little bit longer. I don't know if it's 3 months longer or 3 years longer or 3 decades longer, but it looks like it's still going to be here. And things will kind of pop up here and there that kind of have investors pull back a little bit, especially from things that have gotten really extended. But there's an underlying bid. People want to own these names, and you're seeing it right in days like today.
Yeah, I mean, talk about getting an underlying bid. We got more analysts here on Wall Street who suddenly are coming out as we kick off Q3, and they're saying S&P 8,000 on the table, S&P 8,200 on the table. In your expertise, what has to go right for the market to still keep moving another notable leg higher?
Earnings have powered this market higher. It's been basically the tech earnings, but just overall earnings in general have been doing very well for the past several years now. So you absolutely still need earnings to continue to grow as they have been. It's going to get harder for the tech names to show that growth that we saw, 1 year, 2 years ago, where they were just putting up astronomical growth numbers. That's just going to be a law of large numbers, harder to put up those numbers. But if they can continue showing just really solid results, that's going to probably help at least keep the multiple intact. And then you're going to have to see the other names, the other sectors kind of fill in for where there might be some pullback where investors are going, well, this stock isn't growing 300% anymore earnings-wise. What else can I move into? So if those stocks can get a bid, that could kind of help the S&P 500 get to those targets that some of those analysts have put out there.
Maybe not a ton of catalysts to trade on this week, but we do have Fed minutes. Yep. And in any given cycle, we always look for the release of those Fed minutes. They kind of give us a little bit of a better sense what's under the hood for the preceding central bank meeting. It's the first one for Kevin Warsh. How significant might that be when we learn a little bit more about what a new look central bank will be like in the next few days?
Yeah, I think it's going to be really interesting for the Fed nerds and the Fed watchers and the ones who really get under the hood and who talk about these things on a daily basis, and that's awesome. I don't know how much it's going to move markets or how much the market is really going to take from it. Maybe a short-term, move here and there when they first come out, at 2 o'clock or whatever. But I don't know if long-term it's really going to have an impact. We still don't know what these task forces that Kevin Warsh is setting up. We have to wait for them to come back with their recommendations. The committee has to come and say what they will or will not do, or what they like and what they don't like. I mean, there's still so much to come, but it might be interesting to see how the committee is evolving from, Powell's last Fed meeting to what Warsh and what the minutes say for this one. So just seeing what changes are there is going to be really interesting.
Well, from one Fed nerd to another, let me express my gratitude for you being here to kick off the show today. My man, thank you very much for joining us.
Anytime. It's always a pleasure. I love doing this.
All right, my man. We'll talk to you again soon. Robbie will take your mic. Jeff will head this way. Here are a few of the top analyst calls that moved the tape this morning here on Wall Street you may have missed on this Monday. First up, Goldman Sachs reiterating AMD as a buy. What a story AMD is. Boosting the price target from $450 all the way up to $640 a share. Thank you. They see a favorable setup on the stock driven by strength in server CPUs. Next up, HSBC downgrading Allstate to a hold. Thank you for joining us. They say not a lot of change in the insurance industry that could push stocks in that sector meaningfully higher. Shares up, though, 20% on the year. Finally, B of A upgrading T-Mobile. They call to a buy. They call shares undervalued. Price target of $220 a share. Shares down underwater, however, 11% so far year to date. We'll take a look at two stocks that call the New York Stock Exchange their home. Jeff, look at Dell here. Shares up almost 4.5%. The president this morning told Americans, quote, go out and buy a Dell computer. Shares jumping back today after sliding a bit in Thursday's session. One of the best performers today in the S&P 500. Shares of Dell are up 230% since the start of 2026. It's not the same story, however, for this next stock. We got to talk about Nike, down more than 1.5% today. They remain range bound. They did finally reclaim that 50-day moving average last week, but it didn't last long. Sellers pushing this thing back to 42 a share. Buyers pushing it up a little bit to 43 and change. This stock remains the lowest weighted Dow stock and the second worst performer year to date, only behind Salesforce. America, of course, as you may have heard, just celebrated its 250th birthday. But Cheddar's Justine Miller now has more on 3 companies that are older than the nation itself. Check out part 1 of that story.
As America celebrates its 250th birthday, we're taking a closer look at 3 businesses all older than the country itself, all founded before 1776 and all still going strong on this month's Down to Business. With every green bean picked, every flower watered, and every melon sold. Saunderskill Farms in upstate New York is still thriving 12 generations since the first seed was planted.
It's definitely a sense of pride and respect, and we enjoy what we're doing. That's the main thing. You know, it's not like you're going to work.
Founded in 1680, it's not just the oldest business in the state. It came to life 96 years before the Declaration of Independence was signed, and 52 years before George Washington was born. Kept alive these days by Daniel Schoonmaker and his daughter Renee Ciardi, the two not sure who's better suited to recount the family lore.
You're pretty good at that.
You lived it.
But what they do agree on?
We're very fortunate that we've been able to make a living off the same property for, 300 and some years. Our ancestors put the hard work in.
That hard work dating back to Renee's grandfather with 9 greats in front of it, being awarded 300 acres of land as payment for military service 3.5 centuries ago.
It is a phenomenon that our family has been here for so long.
Over the years, it's been passed down from generation to generation. Daniel and his brother David now at the helm, while their 92-year-old dad keeps up with all the sowing and reaping.
He's very active, knowing what's going on, and wants to know, what are you guys doing today? And is the corn ready yet? Are you picking beans?
And now the newest generation, Renee and her cousin David's son Ryan, returning home, ready to dig in.
It's a lot of pressure. I mean, look how beautiful this place is.
But feeling the 346 years of her ancestors working the land is a support system like no other.
The passion to be here and to work and to make it what it is, I feel like it's those generations before that are driving it.
Their secret to more than 3 centuries of success, evolving. Once a dairy with cows and chickens, then a produce supplier for local hotels during the Catskills tourism boom of the 1950s, to becoming a wholesaler for farms starting in the 1970s.
That's something I would really credit my dad and my uncle for, is they're constantly thinking of the trend and what's changing, and they've been very consistent on staying on top of things and not being stuck and doing things the way that they've always done it.
Pivoting again in 1998 to sell directly to the community with their roadside farm stand, now run by Renee's sister and her husband. Bursting with fresh vegetables, locally sourced products, and an endless variety of homemade baked goods that keep longtime customers coming back.
It's great. A lot of the Hudson Valley is just full of history, and this place is a great little part of it.
Admiring how the family has kept up with the times, staying current, especially throughout the pandemic.
You can order online, even though they're so old, they were able to modernize and have a plan, which is really something to say.
Also bringing in business with pick your own seasonal produce, but it's not just about feeding the community. More so than even fruits and vegetables, they say flowers are their bread and butter, selling more than 100 different kinds. As Renee and Ryan look to the future, they see the challenges from changing labor laws to policy shifts, but know that there's always someone there to back them up.
Dad, I need help. No.
Well, I have a lot of confidence they'll be able to do it. He's
Welcome back to this Monday afternoon edition of Taking Stock, live from the trading floor of the New York Stock Exchange. And please, one and all, say hello to our next guest. This is Anthony Anzalone, founder of Verona. Really grateful for your time. Thanks for joining us.
Thanks for having me on.
You are building infrastructure that allows for more effective identity verification. First and foremost, give us a bit more of an introduction to Verona, and why is your core product needed in the landscape today?
Absolutely. I mean, first of all, you cannot believe anything that you see on the internet, especially in the age of AI. Understanding the truth gets harder and harder. And so we make private, portable, and programmable data that AI agents and people can use.
This is an era, like you said, of AI-generated content. How much more difficult is it to verify what is true and what is not today than even just a few years ago, Anthony?
I mean, I think I saw a stat that AI-generated document fraud is up 500%. You know, it is an intense cat and mouse game, and the cat is effectively losing to the mouse. So identifying from the source and getting source level verification is kind of the only way, and just not even playing the game.
There are bots, there are deep fakes, there are synthetic voices, you name it. I mean, it is out there and it is being used by fraudsters right now. Talk to me a bit more about the internet's so-called trust crisis as a result of what's out there for the so-called bad guys?
Yeah, absolutely. I mean, fraud is up in every industry, whether it be insurance, real estate, you name it. People who have been doing the same kind of fraud verification checks of like 1995. We're in a new era and we need a new way to keep up with everything. And, I think you're seeing a lot of privacy-preserving AI companies come online, and there's a reason for it.
Why do AI agents actually need verified data as well? And talk to me a bit more about the ways that you are thinking about how to solve these challenges that everyone else has faced. We just don't spend our time the way that you do trying to go about doing something about it.
Of course. I really think if you really look into the future, AI is going to dominate commerce. I think you see it a lot. But with AI dominating commerce, you're looking at two completely independent parties that have no reason to trust each other. And AI cannot act on sensitive information. It's just kind of given what it's told, what it believes, right? And so in order for, let's say, if you want to talk about a car loan or insurance in the future, the only way to do that, income verification, employment verification, real world facts need to be identified in order for AI agents to even begin to transact with each other.
What does invisible crypto mean ultimately? That's as soon as I say it brings a smile to your face. What does that actually mean to you, and what are the components about it you would most want someone watching this interview to also better understand?
I mean, I think it's an important day as well, because I just saw Securitize ringing the ending bell, the closing bell of the New York Stock Exchange. Crypto is becoming more and more mainstream, and it is hitting a mainstream audience, and at the same time it's becoming more and more invisible, right? You're being able to see crypto dominate places like the New York Stock Exchange, the real world, and the reason we're able to do that is by making it invisible and only showing the benefits of it.
Are there popular misconceptions you see in the broader identity verification space that you would want more people to have a version of the corrected record about?
I think there's a lot of internet scraping. Which doesn't really do the job too well. And I think that it's super, super easy to fake. And I think everything, you look at the internet now, it's just completely AI slop. And we're trying to put an end to that.
Oh, please, let's limit the AI slop as best we can. I think you speak on behalf of everyone. Anthony Angeloni, founder of Verona. Really grateful for your time.
Thanks for having me.
Here. Don't go anywhere. I got a lot more taking stock coming up live from the trading floor of the big board right after this. Well done, man. Awesome. Time for a few headlines in the world of fintech, crypto, and artificial intelligence for your Monday afternoon. At this hour, the crypto majors are in mixed positioning right now. ETH is up, Solana's down, Bitcoin down fractionally, but having a nice rebound here the last couple of hours. Next up, Michael Saylor's strategy, selling more than 3,500 Bitcoin recently, raising more than $215 million to boost cash reserves and fund preferred stock dividends. And finally, blockchain analysis firm Nansen saying nearly 1 million investors have lost almost $4 billion on President Trump's Trump meme coin, while the president himself has made more than $1 billion from crypto in 2025. John Ehrlichman of Ticker Take stopped by the J.D. Durkin Show last week. Here at the New York Stock Exchange, we talked tech, we talked rotation, and I asked him the question he most gets asked in his DMs about investing. Take a look. You know, has there been parts of the AI trade that have most surprised you with how well they have done as we've gone along here in 2026?
Yeah, I mean, Caterpillar definitely surprised me. Not that we have, it's a name we've talked about many, many times on Ticker Take. You know, I think the fact that you all of a sudden see a rush into unlocked opportunities in companies that might be newer or older, in some cases that might be a surprise. But, you know, the one thing is, like, I started my career during the dot-com boom. And one thing that felt different then, I know we've heard it a few times during this cycle, is the difference in profits. The profits right now and the predictions on where profits are going, which is a key determinant on valuations, even if some companies have eye-popping valuations right now, is very important. And I keep looking at them like every day, JD. I'm checking what's the projection for where the earnings story is going to go with these companies. And the ones that have had the biggest stock moves, not always true, but on average, are on pace for exceptional profit growth in the next few years. And so, you know, that is a key difference for me. The semiconductor sector, you know, whether you want to believe it or not, seems to be trying to paint a new narrative around what it means to invest in the chip economy, that it can be less cyclical if they've got so much demand that they've got to restructure the way they do deals to ensure that they have like a steady flow of business. Most companies are trying to sell the street on the idea that they have a good, durable book of business. And I think the semis are trying to make that case right now. And I think they're making a pretty good case, even though, you know, look, we're going to look back, I'm sure, and say, oh my goodness, I can't believe we got this excited about this name or this excited about that name. You mentioned quantum. I mean, we have an upcoming full-length quantum deep dive on Ticker Take. And I got to say, every time I talk to the people in that particular part of the tech world, I'm blown away, JD. I mean, like, they're painting a picture of, hey, you think AI is cool? Wait till we add the quantum layer to that, and wait till enterprise has the optionality of going from traditional compute to AI power to adding in some quantum lift to that. It's an exceptionally exciting time. You know, I'm trying not to wear, you know, rose-colored glasses here, but I do think that the transformation through technology is remarkable right now, and justifiably people are looking into those, you know, investing themes. And that's the key difference today than probably 10 years ago, 15 years ago. Just the fact that investors are shifting their time horizons a little bit. So the question becomes, do we care about what the company says after 3 months, after 1 quarter, if the hype is just, you know, that? If companies are building for the long term, that's more of a sort of philosophical question, but it's worth watching too.
Let's talk about John Ehrlichman and Ticker Take, the brand. My goodness, my man, what you have built, reaching people where they are, helping to establish smarter investors. Me and everyone else I know who loves and admires your work has followed along for a long time. I know you got a heart out, so I want to get through as many of these as I can. John, what is the biggest investing question that you get in your DMs from followers?
Well, it's 2, JD. I get, what should I buy? Like, what should I invest in? Sure. And then the other one I get is, how do I start investing? And actually, one of the reasons I started Ticker Take was I thought that was pretty profound, that people are willing to jump right into what should I buy when they maybe haven't even thought about how they get started. And the thing with Ticker Take is we really try to help people think like a pro. We've had more than 100 episodes. We've talked to a lot of really bright investors who we've met along the way. And we just try to help people understand how those professionals whether they're value or growth or whatever they might be doing, how they approach investing and why. And then hopefully for investors, new or long timers, they can kind of look in the mirror and have a better understanding of who they might be, because you have to answer that question before you figure out what you're going to buy.
Welcome back. Time now for a few headlines in the world of startups, raises, and rounds. First up, crypto-friendly Erebor Bank reportedly seeking an $8 billion valuation after deposits nearly quadrupled since the month of March alone. Next up, Japanese self-driving startup Turing adding AMD Ventures as an investor, also adopting AMD AI chips ahead of a 2028 expected commercial launch. Finally, smart glasses startup Even Realities raising $150 million at a $1 billion valuation to build privacy-focused AI glasses without cameras. And now Scarlett Sieber is back with a whole new edition of Hindsight 2020. That's where she breaks down important dates in financial history. Take a look.
I'm Scarlett Sieber with Money 2020, and this is Hindsight 2020. Let's rewind back to July 2006. Twitter launches, and the blue bird lives in history. At the time, it's a simple idea. Short, real-time updates shared instantaneously. But in hindsight, it fundamentally changes how information moves. Before platforms like Twitter, markets relied on structured communication. Think earnings reports, press releases, formal disclosures. Afterward, information becomes continuous, unfiltered, and instantaneous. The markets all around adjusted accordingly. Prices begin to move not just on facts, but on interpretation, velocity, and amplification. The timeline compresses. What once took days, hours even, now can happen in just minutes. Fast forward to today's environment. Headline sentiment and signals move markets. That shift, it is fully embedded. Twitter didn't change what information is. It changed how fast it travels and how quickly it gets priced. That is your Hindsight 2020, because in finance, speed doesn't just accelerate decisions, it changes who gets to make them. With that, back over to you.
Welcome back to the show, your final tail of the tape on this Monday down here on the trading floor of the New York Stock Exchange. The S&P 500 finishing the day in positive territory, up about 0.7%. The small caps up 0.5%, with both the Dow Jones Industrial Average and the New York Stock Exchange Composite Index not only finishing up for the day, but finishing in record-setting territory. Tomorrow here on Wall Street, honestly, not a whole lot going on. We are very light on quarterly earnings and also very light on economic data. But tonight, USA, Belgium in the round of 16. Jeremy and all the producers are fired up. Go USA. Thank you for watching today's edition of Taking Stock. Have a great night. We'll see you again tomorrow.